Good morning, good afternoon, everyone.
Hello, good afternoon.
We'll just give it another minute for everyone to hop on. All right, awesome. Well, good afternoon, good morning, good evening to everyone for the market trading psychology workshop. Latson is an alchemist. It has hosted a workshop in the past and is really excited to share his knowledge on marketing and trading psychology, best practices, and what are some best strategies. I'll let him take it away.
Yeah, good afternoon, everyone. Like you said earlier, I'm Latin, and today we'll be having a discussion about the market and trading psychology. Yeah, so the first thing I would like to explain in this workshop is what is psychology. Before, before you can start trading, trader, some of us are analysts. So before you can say you can be a trader, there is something that is governing your psychology. Your psychology is the emotional component that makes you a trader. Like after trading, after executing a trade, what are your reaction about the trade? For example, after making a profit from a trade, what are your reaction? How are you going to react to the market? Then, in case you are making a loss, how are you going to react to the market? If you are on the trade presently, how are you going to react to the market? Like some of my friends will say, trading is not hard. To analyze the market is not hard. It is the psychology that is hard. For example, you will be like, some people will be like, when I buy the market starts dropping. When I sell the market, it starts pumping back. That means the psychology is shaking. And they'll be like, when I have the when my analysis is telling me I want to buy, and probably I did not buy, the market to buy. So they are saying you are buying. Once you buy, market starts selling. Once you sell, market starts buying. You have the plan of buying, you did not buy, market to start buying. So that means your psychology is because if you trust your psychology, trust me, you don't need to worry about anything. Once they're done with your analysis, work on your trading psychology, then execute your trade. So I'm going to be discussing about how we can work on our trading psychology to make
Before
our trade.
Latson goes to the next slide, I just want to confirm with everyone, can everyone hear him well? Just drop in the chat.
Yeah, I hope you guys can hear me. Can you guys hear me very well?
Yeah, Latson, I think if you're closer to the computer, I can hear you a lot better. Like if you're right there, like you're better, I can hear you a lot better.
Um, okay. What's the psychology of the market? Psychology of the market is that you don't need to trust me, the market is not after you. Nothing is after you. Once you know what you are doing, the market is not ready to favor you, and the market is not after you. The market is not against you. The market is just there. It's just there in the sense that everything keeps happening. What will happen this week will happen next week, and things like that. That's That means what happened in the past will still happen now, and what's happening today will happen tomorrow and will happen in the future. That means the market is not against you, and the market is not after you. Nobody is after you, nobody is against you. So about the psychology of a trader, that's where we are going to be talking majorly today. The psychology of a trader is your reaction on every trade. For example, now let's say your analysis is 80%. Your trading analysis is 80%. So that will be like, okay, for every 10 trades you take, you're going to win 8 and probably you lose 2. Yeah, that's very cool. But okay, so now let's say you now imagine that. But I'll tell you that if your trading analysis is 80%, that's not saying if you are taking 10 trades, there is higher probability that you are going to win 8 times. I'll just tell you that if you are taking a trade, it's telling you that there is 80% that you take that trade, that you win that trade, and there is 20% that you be in a loss on that trade. For example, now let's say you want to toss a guy. If you are tossing a guy, the probability of getting an edge is 50%, and the probability of getting a tail is also 50%. So, for example, now if you toss a die 10 times, that means the probability of getting an edge is 5 times, and the probability of getting a tail is 10 times. But for example, now let's say you now toss a tail, you toss a die, so you toss a coin, and you toss it, yeah, we want to toss it 10 times. So you toss it 5 times. The first 5 times, you got edge throughout. You now want to tell me that if you are tossing the 6th time, that means you're also going to get an edge. Definitely, that's a no. So the probability of you tossing the next round, that's the 6th round, is 50% that you're going to get an edge and 50% that you're going to get a tail. So eventually you can toss it all the 10 times and you will get the tail throughout. And you can get probably the edge 8 times and the tail 2 times. So that's where we are coming into trading. The probability of you winning a trade, if your analysis is 80% or 90%, trust me, there is no trading strategy that is 100%. Trust me. Because even Dirk said, you win some, you lose some. So you can't, trust me, you can't win all throughout. You can't win the market all throughout. Someone is telling you, come and learn this analysis is 100%. That's like Drake said it earlier. So you win some, you lose some. Long as the outcome is income, that's just the main thing. So you taking probably now your analysis, your trading strategy is 95%, and your first trade is a negative trade. So what's going to be your psychology on your next trade? What's going to be your psychology on your next trade? That's where the FOMO comes. FOMO comes in the sense that people don't want to miss out any of the markets. They will be like, okay, this is the market. Let's say I'm on BTC and USDT chart. Let me go to probably the daily chart. So now, yeah, I'm on BTC daily charts, for example. Now, as you're looking at this chart now, okay, for example, I guess BTC is bearish now, BTC is dropping. So you probably your last two trades last week was probably a negative trade, and be like, okay, my trading strategy is 80%. So that means for the next 8 trades I'm taking, that's going to be positive. Believe me, that's a lie. Because your next trade is just telling you that you have 80% that you are going to win that trade, and you have 20% that you're going to lose that trade. So if you are now having the probability that you are now having the mind that my next trade, probably my next trade is going to be, I'm going to win because I've lost the two. Okay, so for example, now probably you're supposed to short this market for probably people trading futures, and you want to short this market. So normally, as a technical analyst, only few people got this entry because a lot of people will be waiting for. Okay, let me a lot of people will be looking for entry here. A lot of people will be looking for entry here. A lot of people will be looking for entry at this box. So probably you as someone that you're attacked with FOMO, fear of missing out. Normally you should have waited for a year before you short, but you did not wait and started shorting. Definitely you will be lost in the market because the probability of you winning the third trade is just 80%. So fear of missing out, let's try to work on fear of missing out. Fear of missing out, that's what we call FOMO. So then what can FOMO lead us to? FOMO can lead you to take every single trade you see. You'll be like, okay, this is the market. For example, now the market is yeah, the market is the market is going up presently. Yeah, the market is going up presently. Okay, yeah, okay, let me belong in the market, let me belong in the market. Yeah, you keep on adding more position, you keep on adding more position, and you're learning, okay, BTC will break 60K or all those other things they are seeing online. So you start longing and longing and longing. But trust me, you can't take all trades in the market. You can't take all trade in the market. There will be an opportunity every day, every week, every month, every year. So you can't take all the trade, you can't take all the opportunities in the market. You have to take some and leave the rest. You can't take all the opportunities. For example, you notice some people, some traders will be like, okay, I'm buying. Some traders will be like, okay, I'm selling. And at the end of the day, from the same trade, both traders will be profitable. But the time will be different. Probably one is closing his trade probably in 2 hours, and probably one is opening his trade for the day. And at the end of the day, both of them will profit. So the idea is you have to identify what works for you. If you open a trade, let's say you open a trade here, let's say you open your trade here, and probably to this point, yeah, trust me, you are okay. You can't take everything, you can't take all the opportunities in the market. But once they're attacked by fear of missing out, you'll be like, okay, this thing is still bullish. Okay, let me long it. This thing is still bullish, let me long it. This thing. So now imagine someone that long here, and okay, say okay, so BTC will come here. So you're putting your stop loss here. You have the long here, then your stop loss is here like this. The stop loss is here. The profit is around here. So that means you've lost this trade like this. This is your first position, number one trade. Okay. So you're like, okay, BTC there will be another position here again because you've lost three trade like that. You lost two trade yesterday. You lost another one trade. You've forgotten that your probability of winning this trade is 80% and 20% of losing the trade. So you lost this one again. That's the third one. You're like, okay, let me take another long here. At least BTC is bearish. It's a fake out. Okay. It's a fake out. Let me take another one. So you took another one here. Took another one here. Put your stop loss there. Okay, let me maintain the same take profits. Again, you are losing the trade again the second time. That's the fourth trade in a row. So what FOMO will now lead you to, okay, what am I doing? Probably you've designed your accounting, you are always risking probably 2% of the account. So you'll be like, and I've lost four trades in a row. So let me oversize my position. Probably you just used to use 5 leverage, 10 leverage. Okay, let me long it again, and probably I should use 30 leverage. Probably long it around there again. So take profit here again, and okay, because you are no more analyzing very well again. So you want to put your stop loss there again. So your stop loss will be around here. So you are using 30x leverage and you are risking around 40% of your capital instead of like 10 to 5% that you used to risk normally. 10 to 5% normally. Now you are risking around 40% of your capital and you are still using 40x, 30 to 40x leverage. And trust me, there is a high tendency that I've not analyzed the market yet today, but there is a high tendency that BTC might break this level, though I've not analyzed. But what if it breaks it? There is high tendency that your account will break. So imagine, let's say you funded your account with $10,000 and Under the account $10 is there. You've been trading, you've 10x your account, that's $100,000. So due to your trading psychology, you are now losing everything in one single day. You are now losing everything in one single day. Probably you are losing 80% because you want to revenge on the market, because you want to take what you are not the owner of the market. You are not the owner of the market. There will always be an opportunity in the market. Trust me. There will always be an opportunity. Okay, let's look at trading pair. So right now. So let's look at the BNB. Let's look at the finance company. Yeah. Okay, I remember this Binance coin. I remember I called Binance coin $40. I called at $60. Then I think yeah, when we reached $400, I told people to start taking their profit, start locking in profits. So okay, now imagine, yeah, for example, now let's say you followed my analysis. You bought from $40, you bought from $60, you bought from 80. So as we reach 400, let's say we reach $400. So that means probably yeah, $10,000 is now like $40,000. Okay, then I think this is for around level 400 level. So you're like, oh, this thing is still pumping, this thing is still pumping. Okay, you added more position, and okay, $40 don't turn $60,000 and like that. But look at this level. Look at this level. Imagine you still longing. Let's say you're like, okay, I don't enter $100,000 now. Let me just lose probably 30% of my account. Let me long it more. Probably we'll go to 800 because a lot of people are shilling Binance coin to $1,000. A lot of people are shilling Binance coin to $1,000. And okay, so you took your first long position. So after you took your first long position, then what happened? Market hit your stop loss. And okay, you're like, okay, probably market will test back to $400, and after the $400, it will start going up back again. Okay, you waited here, and next thing, when you reach $400, you enter another long position, like we're going to 1,000 because you've seen someone on Twitter posting $1,000 or something, and your stop loss is around $300. That's your second trade. You've lost the second. Yeah, so now you've taken your three trades now, and you are now in concern. You are thinking about what's going on. Like, okay, what am I doing? What's the market doing with me? Probably the market is against me. Why is it that once I entered the market, I've backtested this thing on my demo account and it works. I backtested it for probably 2 to 3 months and it works. So why is it now that I'm having issues? Okay, I've taken the third trade now, I'm a loss. Now, so you're taking the fourth trade. But you've forgotten that the fourth trade again, you have 80% sure that you're going to win in the market and you have 20% that you're going to lose in the market. So you're like, okay, let me take it at 400 again. Let me take probably okay from market book from 400 again, and let's say you took it from 400 again. Took it from 400 again, your stop loss is around A, and probably you're targeting the all-time high now. Yeah, so now markets went into profit after you entered, and after market went into profit, the market has broke even back and now you're in the loss. So that's where what we call take something out, take partial profit from the market. So as the way I execute my own trade, at every interval, once I'm executing a trade, I will have marked out the point at which I want to take a particular profit. For example, now let's say if I'm targeting this phase as my all-time high, like that's the final take profit. So if this is my final take profit, as I enter the market like this, at I entered at 400, at 4, this is my red line 0.79 fib level. At 474, I'll be taking something out from the market. At at this level again, at 495, I'll be taking another thing out of the market. At this level again, at 517, I'll be taking another thing out of the market. And this is my take profit 4. So that means I have 4 take profit level now. I have a TP1 here, I have a TP2 here, I have a TP3 here, I have a TP4 here. Then finally, this is my final take profit. So even before these markets went back to my entry, or probably now I'm in loss, I've taken probably more than 60 to 70% of the trade. Because trust me, you're not the owner of the market. You don't own the owner of the market. You don't know the owner of the market. You're just going to the market to take something and you leave on time. So if you want to be greedy on the market, there is no way FOMO will just set in that fear of missing out. So remember to always take the profits out of the market. Once you analyze your chart, mark entry that you are going to be taking out from the market. So imagine, okay, let's say I'm the one taking this trade now. Let's say I'm the one taking this trade. Probably I've lost 3 trades now. And let's say I don't used to take anything out. I'll always wait for my final take profit. That means probably there is a probability that I'll also be losing each trade. Or when it's come back to my entry, I'll be like, this market is just against me. The market just hates me. Why? My friends are making it. Why is it that I'm the only one? This market is against me. It's in profit before. Probably I'm in profit of over $3,000. Now I'm back to loss. So remember to always take something out from the market. Imagine I'm taking profit at level 1, profit at level 2, profit at level 3. Market even reversed on my level 3. That's like a sniper entry on my level 3. Because if you look at it very well, you notice that this is my take profit 3. That's around $518. So that's about that, about the of the trader. So working with your emotion, I guess I've covered that. So just remember, if your trading strategy is 90%, trading strategy is 90%, remember that means you have 90% of winning a trade and 10% of losing a trade. So that means it's not that if you are taking 10 trades, you are going to win 9 and you're going to lose 10. So know how you are going to be leveraging on that. And remember, the market is not for you. Always take something else from the market. So apply this year. This year is dollar cost averaging. For the spot traders, if you are going to be applying this year, that means you want to be buying a particular asset gradually. For example, now probably let's say you are working and at your place of work, you're collecting probably $1,000 on monthly basis. You can be like, okay, if I'm collecting $1,000 on monthly basis, if I'm collecting $1,000 on monthly basis, that means I can I can use to invest probably 20% of my portfolio. So you want to invest 20% or 30% of your monthly salary. That means you are going to be investing $200 to $300 on a monthly basis. So for example, now let's say I want to be buying Bitcoin. So that means I'm going to be buying $200 to $300 worth of Bitcoin on monthly basis. And how dollar cost averaging is in the sense that you don't care about the present price of Bitcoin or the particular price. For example, let's say probably have analyzed the security coin now. I've analyzed it very well. I was like, okay, probably in 2 to 3 years' time, security will be around $25, $25 to $30 in 2 to 3 years time. Yeah, that's my analysis. And okay, that's my analysis. The next thing is I want to accumulate probably 5,000 token. You want to accumulate 5,000 token, and you that you're working $1,000 on monthly basis, you will eat, you will do some of the other things. Remember, you have to take care of yourself as a trader because health is wealth. So the next thing, the best thing for you to do is to DCA, dollar cost average your asset, and probably invest $300 on monthly basis into prevalent coin. So that's if you analyze that, that's your analysis. I'm not analyzing any coin for anybody presently. So on monthly basis now, probably January, you're removing $300. You can put your this year in a way that it will you can put it in a way that a robot will work for you. Probably uh, auto transfer. Like once the money enter your account, the money will your account will send it to your application that you're using to trade, probably your Binance or your Coupon or any other exchange that can find your equivalent query assets. So once the money enter Binance or Coupon or any other exchange, you will set your auto trade that just execute this trade for me, just buy it for me. So that means every month, probably first of every month, you are going to be buying $300 worth of security. And after buying $300 worth of security, if you are going to be DCA, yeah, that means you are looking at the long future. You are looking at long term of the project. So you are not even ready to take profits presently. So you are not caring about the present price of the market. So probably if the token is pumping or ranging or dumping, yeah, all you know is you are just buying. So at the end of the day, there is no way at which you will buy using DCA for a long term and you will not be in profit. Because, for example, now let's say at this month you bought at $2.2, the next month you bought at $2.5, the next month, the following month you bought at $2.7. The previous month again, it might have dropped because the market will not just keep on pumping and pumping and pumping. Let's look at Solana. Let's look at okay. I guess I'm back. So let's look at the Solana. Let's look at the Solana coin now. Look at the market after markets market pumped and pumped and pumped, and from that market started doing correction. So the market cannot just keep pumping and pumping. So for example, if you are DC, let's say you apply DC to your so let's say you bought here, you bought here, you bought here, you bought here. That means this is the next place you are going to be buying. So even if the market is going to be shooting up again, if the market is going to be shooting up again. So that means you bought some here. So at the time the market is reaching here, the price of Solana is reaching here, that means you're in profit already. So apply DCA and buy at different level. Don't invest if you don't know, you know you don't have the power to invest everything at once. Don't invest at once and apply DCA. Yeah, DCA versus old. DCA versus old works in the way that both are for people that are considering a long-term investment. So for example, now let's say you are applying GC, that means excuse me, that means you are buying gradually. That means you are buying gradually. Okay, few months ago, let's say probably okay, this is July. This is July. For example, now this is July. You are probably you're collecting $5,000 and you invested all the $5,000. So after investing all the $5,000 a after investing the $5,000 a and probably someone that is DC applying DC, the person bought $1,000, the person bought $1,000 a the person bought $1,000 a one, the person bought another $1,000 at this box. So for example, now let's say that you bought the first $1,000 here, you bought the second $1,000 here, then the third time you are buying another $1,000 here again. That's the third time. Then the fourth time, probably you're buying $1,000 here again. Then the fifth time, you're buying another $1,000 here. Let's say you even bought here. So that means you bought one here, one, two, three, four, five, and another person. The person just come, okay, long-term investor, and just execute his own $5,000 a. Believe me, if you are going to accumulate the total tokens that both of you have, believe me, you have more tokens because you bought some DPA while the market was doing correction. So you have more tokens. Probably this person will have, probably let's say this person have, let's say 600. So this person that just bought everything at once, probably he has 600. So at the end of the day, and you will notice that you bought in different places, you have probably 650 to 700. So dollar cost average your token. Make sure you can save in crypto instead of saving in your native currency. Whereas let your trading psychology be assessed because your mental health matters a lot in trading. Your mental health matters a lot in trading. So benefit of DCA to traders. I've talked about that already. So the benefit of this, at the end of the day, you'll be able to accumulate more tokens, even if you and someone you are investing a total amount. Let's say you're investing a total amount of dollars in the market, you are going to be you're going to be making more profit than the person. For example, now, okay, look at what happened now. You bought $5,000 here, but your analysis probably you're a long-term investor. Probably so that means your stop loss is like around, let's say $10. So if your stop loss is around $10 because you're investing big. So let's say, I think this is $10. Yeah, then this is $10. Then probably okay, you put your stop take profit at probably $150. Okay, yeah. This is a long-term investor, but you just bought it and probably you not even use stop loss safe. But I advise you to always use stop loss if you're not a long-term investor. Long-term investor like can hold a coin for 2 to 3 years or 5 years. So look at your trading psychology can come like, okay, I bought here and market started dumping. Like, what's going on? What's going on? Before market started going up back. So even if your psychology, if your emotion is not strong enough, you might have sold off in loss. Like, this thing will crash. What's going on? But okay, let's say your psychology is even strong. You just bought and you not even use stop loss and you left it there. So and later market started going and finally you're in profits. Finally you're in profit level. But for example, now look at from someone that is applying DC, dollar cost averaging. The person bought his first one A, you bought your first one A, then as it came down, you bought another one. That means you don't even need to care about it. Probably the market is going up or down. So you bought here, market went up. Even you're happy already because you know you're in profit already. You bought another one here again. Market went up, come down again. So with this one and this one, plus this one, you're already in profit. And this person is still in crazy loss. You bought another one here again, third one, the fourth one. You are still in profit already. So that means there is no way your trade 2, 3, and 4 are in profit here already. And it's just your trade one that is at break even. And this person, his trade is just back to break even. And you took your fifth trade here. So as you took your fifth trade, probably you went to the loss gradually and before you started shooting up. So at the end of the day, if this person is making probably 100% at 50 level, this is, this is 50 level to 100. Yeah, 50 level to 100. This person's $5,000 a has turned to $10,000 as at this point. But your $1,000 here too has turned to $2,000. Your $1,000 at 20 has done around 5x, has turned to $5,000. $5,000 plus $2,000, that's $7,000. This is another $1,000 at 25, 25 to 100. That's 4x. That's 400%. That's the $1,000 has turned to $4,000. $4,000 plus $4,000 plus $7,000. That's $11,000. This is your fourth one at 30. That's 300%. That's 3,000. $3,000 plus 11K. That's 14K. Then the third one at 80. Probably this is just like 60, like let's say 40%. So $1,000 and some 400. So from $13,000 plus this, that's around $13,400 plus your capital, $14,400. So you both invested $5,000 in the market, and this person is at $10,000 and you at $14,400. That's extra $4,400. I get you understand what I'm trying to say. So always apply DCA for long-term trade. Predicting market psychology. I talked about that earlier. So that means you are predicting your psychology. Everybody's psychology is different, believe me. Everybody's psychology is different. So that's why just do what you know it will work for you. Do what you know it will work for you in the sense that make sure you practice on demo. Then don't just go to your Twitter profile and start shilling and looking for what somebody is saying or what another person is saying. For example, now you go to Twitter and search for covalent coin. Okay, now this person said, I have a small bag in security, but I tend to believe this is very undervalued gem. So okay, yeah, this is very undervalued gem at $1.2. This is the person's analysis. You don't know what this person is saying. So probably you now go and invest all your capital inside this coin because they are saying it's a very undervalued coin. You don't know what the person is saying. That person that is saying he has a small bag. A small bag can be 1% of his total capital. So if you want to be checking Twitter to analyze your coin, probably it will just be to have an idea of what you are looking for, to not now be the entire thing of what you want to do. Okay, now see this person analysis now. Security may be this. The person said maybe this. Some analysts will even say not a financial advice. So let's look at the person's projection. Let's look at the person's projection. So the train of okay. I think yeah. This person is trying to say security to $10, around $5 to $10 once it broke out. That's the person's analysis. So can now say, okay, let me check. Probably okay, this person has a lot of followers. Okay, look at the person just have 89 followers. So and one more for 20. So it might even be new to the crypto. It might just be saying his own. And trust me, probably if the opposite happens, let's say security dumps to 0.1, is not going to be responsible for your trading loss. So you have to analyze your markets yourself and predict what the psychology is working for you. But if you are going to be using long term, you are going to be using long term trade, focus more on your fundamental analysis, focus more on the user cases. Like look at the equivalent coin now. The equivalent coin focuses more about how to process data. There are a lot of projects they are collecting data, but all of you are collecting data. The equivalent coin is focusing on how to process data. So that means probably at the end of the day, unified API. So probably at the end of the day, once other projects they've collected data, they will have to bring it to Covalent or come and use Covalent API, and that's a strong user cases for the project. So fundamentally, I believe Covalent is a strong project. Look at one unified API, 1 billion responsibilities. So let's go back. So focus more on your fundamentals if you are analyzing for the long term. Yes, I'm talking about everything before proceeding to the next slide. Yeah, so I have fundamental analysis. Fundamental analysis is just looking about the news. the basics about the project, the user cases about the project. Check on Twitter. Check most projects. They will audit them to check if they pass their audits to avoid being robbed. Check a lot of influencers, probably if they are reviewing them, and Twitter, just go to Twitter and just go to Twitter and use the hashtag. If you're searching for a profile, use the hashtag, the dollar sign, and put the name of the token security. Like this will start now. Security down 0.25. This was September 11. With current price 1.2 security trading. Okay, for example, now let's look at this person. This person now will start tracking. So for someone like this, for profile like this to be reviewing a project, that means the project is standard to an extent. You can't say profile like this shilling a shit coin. So once they start providing information like this, because believe me, once the project is gaining future, it's gaining publicity, a lot of top influencers will start reviewing the project because they also want to be part of the project. So this person is giving some little information about the security and let's look at this. A lot of people are reviewing the crypto rank platform. A lot of people. So once you notice that, look at this person now, do your own research. So it's telling you that it's now responsible for probably your profit or your loss. Top bullish trend in USDT pair security. So just check for Twitter to avoid being robbed because if it's a shitcoin and probably is not they've not performed audit or probably they failed the audit, they plan to rob. Like the meaning of rob is the programmer they will crash the website and remove liquidity so you people won't be able to sell the market. So let's say you want look at this now, Gen X analysis. Once project like this starts chilling in CoinGecko, Solana, Algo, FTN, trust me, that project can work. So look at your fundamentals very well. Check their websites. Check their website. Look at the user cases. And after checking their website, scroll down to the last page. Check their Telegram community, events, blog, YouTube. Go to their YouTube profile. Check how active their YouTube profile is. Check their blog. Check their blog. Check their Telegram account. Check their Twitter account. Check their Discord account and make sure everything is okay. Because it might shock you. You will check some Twitter profile account and you'll be seeing a project having 200 followers. A project of over 2 years having 200 followers. Like that means that's just a rogue project. So let's look at the covenant profile now. One unified API, 1 billion responsibilities. They are always processing data. And while almost other projects focusing on collecting data. So look at the profile. Look at the profile. It's look at okay, let's look at some of the people following. You see top big people following them. So if top people are following them, definitely crypto flower, imagine pancake BSC, poker strata, no journals. So if projects like this are following them, trust me, the project is fine. Because pancake swap cannot follow a project that will almost all the time. So focus on your fundamentals. Then after checking your Twitter, go to YouTube channel. I think I check a project and I saw two videos about the project. And after checking the two video, the video was trash. And I was seeing 17 subscribers, 17 subscribers for a project. And they are claiming they are doing this, they are doing that. So look at their YouTube profile, look at what they have been doing, and check their videos, check their playlist, check their community. Those are how you can avoid work so that you won't work. Cool. Check their medium, check their blog, this is the problem. Look at the blog. Just look at the blog. Let's look at their Telegram community. Let's look at their Telegram community. Telegram community also. I'm just trying to show you all these things so that you will know what you're doing inside the Telegram community. Okay. Okay. Once the Telegram community is back, I will show you. Then that's fundamentals and technical analysis. Technical analysis, like I said earlier, technical analysis is just we are looking at what happened in the past. We are using it to predict the future or what will happen presently. So that means you don't have to revenge on the markets. You don't have to be greedy with the market because you said technical analysis is you are using what happened in the past to predict what will happen in the future. That means even before you were born, what happened then is still going to happen. And when you are gone, say what happened will still happen when you are gone. So if what happened today will happen tomorrow, will happen this week, will happen next week. So why do I want to be greedy? You can't take everything from the market. So why do you want to be greedy with the market? You can't take everything from the market, believe me. You can't. You just can't. So this is our chance. For example, now you guys scalper now, you guys scalper from here. So let's say now you bought here, you sold here, you bought here again, you sold, you bought, you sold, you bought, you sold. So that's just the thing. You are buying and selling. You are buying. So you don't need to be good in the market. Okay, I don't want to use all my portfolio to buy because market will still come. There are a lot of entries in the market. You can't analyze all coins. Okay, let's say you want to add probably crypto. You can't analyze all coins. Let's check the crypto. Let's check the crypto search. Can analyze the crypto. All the ordinary Binance, they are close to over 10,000 coins. They are close to over 10,000 coins. Where is network between? Where is network between? Okay, I think the Telegram community is about. Look at the Telegram community. Look at the Telegram community. This is around 13,700 members. So that means, and okay, let's look at today's chart. This is today, September 13th. This is today, September 13th. Today is CLA. Look at a lot of message. That means the project is very active. But you are now making research about the project and they are seeing August 25. So what have they been doing since then? That means nobody is talking, nobody is talking. So make sure you check your fundamentals very well to avoid being okay, then technical analysis, what happened in the past is what will happen again. So that means you are doing the same thing with technical analysis. So you don't need to be greedy with the market. Take few, even if you are looking at the long term of the project, take profit at intervals. Take profit at intervals. Let's say okay now you bought at $3, you want to sell at $12. That means you have to be taking something from here. You have to be taking out something out of the market at $5. You have to be taking something out of the market at $6, 5.99. You have to be taking something out of the market at $8, and finally you are taking something out here at this your final profit. I think this is your final profit level. And even if you are still looking at this safe, there is still another take profit level here at $17. And look at it. Immediately market took profit at $17. Look at the sharp drop. Look at the sharp drop. Market dropped back from around $18 back to $9. That's like 50% drop. So if want to be greedy with the market, you'll be like, okay, I'm in profit before and market dropped drastically. You might have closed a loss. So always make sure you're taking something from the market. Take something out of the market. Don't forget, you're not the owner of the market. There will be always an opportunity every day, every week, every month, every year. If you are just joining the crypto, there is always be an opportunity in the market. Thank you very much. I hope this will help us to build a stronger trading psychology and we'll be able to manage our emotion. Thank you very much.
Thank you, Lesson, for the presentation. Yeah, does anyone have any questions for Lesson? You can drop them in the Q&A or in the chat, or you can raise your hand, and then we can also just bring you on the stage as well. Yeah, but thank Lesson for showing Trader View. I actually never used that platform before.
Yeah, I'm on the. I can't see any question on the Q&A session for now.
Yes, I don't see any questions as well. Maybe just like give it another minute.
So please, does anybody have a question?
Yes, so I think there's a couple of questions in the Q&A. One of them is just wants to ask if so. Yeah, I want to know if one of you has access the quarter came in late due to poor network signal. Yes, the workshop will be uploaded to YouTube, and it will be in the next couple of days. You can check the Covalent YouTube for the recording. But also, I think last one would be more than happy to share those slides and also just share the resources that he presented today.
Yeah, thank you, Jennifer, for
Yes.
answering the first question.
First
So
question, yeah.
about the second question, if you do a technical analysis and it's failed, what do you do next? Yeah, what do you do next? Don't forget, while you're on demo accounts, while you're on demo account, probably your strategy, you're able to build a strategy of 90%. That means if you are taking 9 trades, if you are taking 10 trades, 9 should be profitable and you should lose one. And so for example now, let's say for example you are losing your first trade. So that means you've lost your first trade. So technically your the next 9 trades should be profitable. But based on what we've discussed earlier, I've now told you that it's just telling you that you have 90% of winning a trade and you have 10% of losing a trade. So once you take a trade and you've lost from the trade, next thing for you is just to check. You check the major reason, check what happened. Probably if your fundamentals is okay, that means probably there is if your technical analysis is okay, based on the some technical analysis, that means probably there is a news of something. And so the next thing is for you is just to go to your search engine, and search all the news. Probably there is a news, and probably you now notice that okay, there was no news. So that means probably you and you were early in the trade, probably, and if you are not early in the trade, probably that one is just the lost one. So the next thing is not for you to enter the market immediately. It's not for you to enter the market immediately. Stick to your trading plan. If your trading plan is to take 2 to 3 trades in a day, and or let's say your trading plan is 2 to 3 trades in a week. So after taking that trade and you lost the trade. So far, it's not only trading you're doing, you have a lot of things you're doing. just take a relax and probably just take a relax and have some break. Take off the markets. Give yourself a break. Don't be like, okay.
Hassan, I think you cut off for just like 1 minute. So if you can just repeat, just like the last minute.
Okay. Okay. So what you lost the last trade. The next thing is not for you to enter the market immediately. So just follow your trading plan. Your trading plan can be once I lose a trade, I take a break throughout that day. I'm not taking any other trade that day again. So let's say you take a break now. Today is Monday. I lost a trade on Monday, so I'm coming back on Tuesday. Once I open the market chart on Tuesday, the technical analysis, the next thing is not for you to say, okay, I want to make what I lost yesterday. You are not saying that. What you want to do is probably you want to make you are making $1,000 from a daily trade, and yesterday probably if the trade is going to be going against you, that means you are losing 20%. That means you lost $200 yesterday. So it's not for you to say, okay, I want to make that $200 back. Follow your trading plan, because if you be like, okay, I want to make $200, I want to make $200 from the trading back. Okay, fine. Now be like, okay, this market is bearish now. This market is very okay. Finally, it's bearish, it's bearish. If you are looking at the trend line, you notice that okay, this market is bearish. So if this market is bearish, probably you woke up around here. This market is bearish now. Okay, so that means you want to be shorting the market, and this market is bearish. So you waited for retracement, and okay, now you are shorting A. So that means you are shorting A like this. So probably you put your stop loss A. Put your stop loss there, and probably you are putting your take profit A. But normally in this market, you are shorting from A because you want to quickly recover the last $200 that you lost instead of following your proper trading strategy. But assuming you are following your proper trading strategy, you will notice that okay, market is consolidating A. So if market is consolidating here, you are not to take any trade from here. You have to wait for a breakout from this consolidation. After waiting for a breakout, then wait for a reversal and take that trade. But because the ego to make the money you lost on that lost trade, you just take the market here again, and finally again, you are losing the trade again because it stop loss again here. That means that's another $200 again. But let's say there is another person too that lost the trade yesterday, and that person, you pull yourself down, you're like, let me calm myself down. Okay, let me take some drinks and move the market. Then you're coming back to second day. Okay, this is the market. Yeah, you spotted it. This is the consolidation. This is the consolidation. Then the next thing is okay, a break in consolidation after the market has broken the consolidation. Then this is it. After the consolidation, you have um, yeah. After consolidation, you have a break in consolidation, market broke the consolidation, then you have a retracement. Then after the retracement, then you have your entry. So the second person that was calm with his trade, and probably he has even cooled down. Okay, that was for the last one, and then the second trade is I have 90% of winning this trade. So that means if I'm having 90% of winning this trade, that means I need to be analyzing everything very well. Then okay, the person come here. This is okay. This should be my entry. This is my entry. That means I'll be shorting A. That means I'll be shorting A. Yeah. Then my stop loss will be above the last I. Because I put this last I there, I take profit in here. Just okay, look at this person now. Look at this person. Look at this person now. Person the person has made his $1,000 back. But the person is not going in the market to make that 1,000 to make the last trade. The person has made his profit for today, and he has realize what he has recovered what he lost yesterday. But because your own psychology, your own trading psychology is weak, you are picking the market earlier. Just because you want to revenge on the market, you want to quickly make what you lose. And that means you are losing the second trade again. And the person that made the proper plan, the person, for example, even let's say the trade did not even hit stop loss, say, or let's say probably you use a wider stop loss. Let's look at it now. Look at what you are risking. You are risking close to 50% of the portfolio just to make 100%. Because look at the risk to reward. The risk to reward is one. That means you are risking 50% of your portfolio to make 50%. You are risking $1,000 to make $1,000. Look at the second person's trade. The person is risking person risk to reward is 6.1. That means the person is risking, let's say, probably $200 to make $1,000. So if the boat trade should reach here, that person has made $1,200 and is only risking $200. So as at here, say that person has made like $900 and you are just making the person will make more profit than you at the end of the day because his entering is short A, you are entering your own A. So the person is risking what the person is risking is lesser than what you are risking. Your own account can blow, which the person's account will not blow. Then the person is making more profits than you at the end of the day. So once you lose a trade, the next thing is to go back to your trading strategy and follow your trading strategy. You don't need to invent your own. So I guess that answers that question. Yeah, please any other question? Yeah, please any other question, please.
Awesome. I don't see any other questions.
I,
That's it.
I can say a question. No? I
Oh,
can say
awesome.
someone
Go
does
for
have
it.
a good question. Does not need to do a technical and fundamental for picking out the con. Okay. Yeah, but, um, do you need to do a technical fundamentals before picking out a coin or token to trade, and or it's done after picking a coin? The first thing, no, you have to pick a coin first. So now you can just say there about the coin on Twitter. For example, now I got info about a coin on Saturday. The name of the coin is Good Bridge in GB. So they dropped to people and I think it was there dropped at $1 and can you hear me now? Jennifer, can you hear me?
Yes, I have been able to hear you. Yes.
Okay. So and so the first thing is after you have to have a little information about the project first. So probably you can just be surfing the Twitter or probably on YouTube and you come across the project. So the next thing for you is to do some research about the project. Probably our advice if you are going for long term, if you are going to be a long term trader, I would advise you to go for fundamental analysis first. So I said the name of the coin is GB. So that means you'll be searching for GB. It's your hashtag. You'll be searching for looking so it's just a new coin they launched yesterday. And okay, let's look at let's look at what I said. If you have airdrop both bridge, you have to hold. It's the reflector token. Well, you can decide to hold or sell. That's your own choice. Let's say you do not get the airdrop now, you want to buy it. Okay, okay, let's check their Twitter account first because it's still a new coin. So that means a lot of people will probably be analyzing it yet. Okay, you see, someone have tagged them. So check official accounts. Check. So just keep on scrolling. You will surely see someone that will tag them. Okay, now. Oh, sorry, I'm back to security. Apologies for that. Okay, JP. I'm trying to make it practical section so that you won't have an issue. Okay, just look at it. They joined Twitter September. We are still in September. The project launch on Saturday. Today is Monday. That's not up to 48 hours. And they have close to 5,000 followers now. That's what I'm trying to tell you. That's part of the sign of a good project. So GB is a fair launch community token built on Avalanche blockchain. Then look at what they pin there. This is September 11. Good bridging. Look at the total supply. Total supply is just 14.3 million. This is the contract address. So then to bridge. Okay, these are their past news. So these are some of the things we check. So after checking this, okay, this is their Telegram profile. So let's go to their Telegram profile. They did not put their website, but you just have to find their website. You have to get their website. Or probably if you can't get their website, ask on the Telegram page, ask their admin, can I get the link to the website? How fast people are replying you. The rate at which the more they are replying you will also determine how the project is legit. You know that you now ask question now, to now be around probably in 6 to 10 hours before someone will reply you. Please don't make sure you are not buying Bitcoin. So this is the Telegram profile. Let's try to access the Telegram profile. Pending the okay. Yeah. Imagine 3,700 people in the Telegram profile. So those are the things. Then another thing you can check on CoinGecko, check the rate at which transaction are going. Is not that while checking the transaction, copy the contract address, copy the okay. This is okay. So let's copy the contract address. After copying the contract address, let's go to Avalanche Explorer. This is the Avalanche Explorer, and let's check the transaction because you can see some point and while checking the Explorer, you notice that probably like a wallet is holding around 70% of the total supply. So there is no way the wallet holding 60 to 70% of the total supply. Once the person agrees to take profit, once the person is selling it to the market, trust me, the project will crash. The project can drop. You see some coins dropping from $200 to $1. So those are what to avoid. So check their Explorer to make sure they are not buying the fake token and it is fairly shared among people. Probably, uh, let's say the total supply is 14 million, and probably they blocked some. Those are the things you need to check. This is their balance scan. Let's scan their contract address and let's see. Page. Transaction. Okay, so last transaction. So many people. Let's tell people. Check out people. Data which people are sorting. can see gold bridging token. So I'm trying to check how people are swapping the code. So the major thing is I checked a avalanche scan. The major reason, okay, you might be asking that why did I know it's avalanche scan that I check? Because when you check their Twitter profile, they wrote it there built on avalanche. If they wrote built on Ethereum, like if you are checking the prevalent coin now, prevalent coin is on Ethereum chain presently. So they are going to be that means they are going to be checking Ether scan. If they are writing by BX scan, then Binance matching, that means they're going to be using the BX scan. If they are writing probably the Solana chain, that means they're going to be using the Solana scan to check. So I guess that's about that for the first question. And then so can you please let me read the second question out? Okay, so so you have to once you get the coin, analyze with fundamental analysis. So after analyzing with fundamental analysis, you've noticed that okay, it's a fair launch. There is no there is nothing like probably 70% of the total supply is owned by the admin. That's why you've noticed that once admin takes profits like this, token can fall like 120%. Like a token falling from $120 to $30. Why would that happen when they've sold like 70% of? But look at some projects. The admin probably they only have right to 15%. The total admin, not even one admin, the total admin, the total people that own the project, they might only have probably some projects might even have 7%, some might even have 5%. So after when you are done with your fundamental analysis, check their audits to make sure the project will know after checking all those. And then the next one is to go and check your technical analysis to find a good entry for you to enter. Then you can apply DCA to accumulate more tokens. I've actually been trading without proper knowledge. Yeah, if you have a good fundamental and technical analysis, okay, if you have a strong technical and fundamental analysis, okay, can you hear me? I guess I'm back. Can you hear me?
Yes, I can hear you.
Okay. So if you have a strong technical and fundamental analysis, it will guarantee you a profitable trading. Trust me. To guarantee you a profitable trading in the sense that that means you know what you are doing, you know where the market will happen. Then another thing is before you start trading, make sure you learn how to trade first. Make sure this is not we are not teaching you how to trade here. We are just teaching people how to build a better trading psychology. So because anything like now, a lot of us probably were done with our first degree, second degree. You went to school, you acquire knowledge. So before you do anything, please acquire knowledge about what you're doing before you go into it. So trading is not just where you just go to like, okay, you just now watch probably video tutorial 1 to 2 hours in a day. And you say, okay, I'm now a trader. If you go to school, if you want to go to school, what they are teaching you in school, you see most of them on YouTube. But why don't you go to YouTube and watch those things and say, okay, I've now passed this, I can pass this exam, I can do so like that. So you have to acquire knowledge first about what you're doing. So please, you can contact someone to trade, to teach you how to trade, and probably someone that will tutor you the fundamental technical analysis. Then after that, even if the person is giving you the person's trading strategy, backtest it for probably a month, contest it for probably 2 months before going into your live account. And number three, are there tips you can give on how to carry out technical and fundamental? I think that was what I've been doing since morning. Your coin gecko is there, your coin market cap is there, your Twitter is there. Check on Telegram, check their website, check their use cases. I mentioned one use cases of covalent gathering data and processing data, while most projects are acquiring the data. So covalent is processing it for them. So I think that's what I've been saying so far. What is the best indicator for if you're an intraday or you're a long-term investor? If you're an intraday or you're a long-term investor, like I said earlier, the fundamental analysis is the optimum analysis you need to do. Your fundamentals is the first thing you need to do. Your fundamentals, focus on your fundamentals. So I can say probably if you want to analyze a project, especially in crypto, that does not have an all-time high. Okay, let's look at the Covalent coin. The Covalent coin all-time high is around $2. You can analyze that technically and now telling me Covalent to go to $10 or $15 probably by ending of this year or next year. It's not possible. Technical analysis cannot do that. But if you are looking at the fundamentals, that's when you be checking the market cap, that circulating supply, total supply, and people, the total token that they will be minting, all those things. That's when you cannot be okay. The current market supply or the current market cap of this token is so something. By the ending of if BTC should do something, all those things, they are working on this. If a lot of projects should start using them, they can go to so market cap, and with that, you'll be able to divide it by the present total supply. Then you can say, okay, fundamentally, within 6 months time, prevalence should reach probably $8. That's when you can now say you've analyzed. So if you are analyzing the crypto market, focus on your fundamentals and use your technical analysis to enter. So about the indicator, believe me, all indicators they are lagging because because that's why there are more than 300 indicators. There are more than 500 indicators. Probably your mentor will just tutor you around 10 to 20. There are more than 500 indicators, but you can use some indicators, you can use like 3 to 5 indicators together just to have a confluence. That's part of your that's part of your technical analysis. But me personally, I don't use indicator. If you look at my charts, I think I may call it naked trading. I think I open my charts, call it naked trading. So you are going to see everything you need to see with your naked eye. You don't need any indicator. You don't look and see any indicator on my chart. Even on BTC, and you see sometimes it be like this guy is taking sniper entry and the likes. So just focus on what works for you. When people are using indicator and they're having their way. The last time that BTC done, I was able to mark out. If you remember my post charts, I was able to mark out the points. I think there was BTC. I was telling some people like, okay, yeah, look at this. Do you see any moving average or RSI or something? You can't see any moving average. But as I saw BTC chart, I knew that inside this box that I marked, I knew that there is no way the market will reject, that the price will reject inside this box. Let me change it to probably. Let me change it to probably. Inside this box, I knew that market will reject, and I was not so sure probably to now be at this point or this point or something. So that's when you can now, okay, you can confluence, can look for another thing, can add your indicator, moving average convergence and divergence. But if you are going to be using indicator, just use like around 5 indicators to make a confluence, because believe me, all indicators are lagging. So I don't recommend anybody to use indicator. But if you are using 5 indicators together, you should have a higher chance of winning the market. And don't forget, all strategy is not 100%. Even the naked trading, nothing is 100%. Can one make analysis on daily time frame and pick and choose, or one should go to I think people are already asking questions on trading, and we are discussing trading psychology here, but let me just quickly go through that. If you look at when I started this chart, I was on daily time frame. If you're a long-term investor, you should start from a bigger time frame so that you can have the overall view of what the market is showing. And go to 1 month and see, okay, what's the market saying on the 1 month, and after that go to daily time frame, you have the overall view of what market is saying, like what is going on in the market. So for example, now look at, let's say this is the daily candle now. Everything is just bearish. Let's go to 5 minutes and see. Look at today is 13 now. Today is 13. So if today is okay, this is what has happened. So if you are looking at 5 minutes, we are looking at 5 minute chart for what happened today only. It's like the market is ranging. It's like the market is ranging for what have happened today only. But when I even say bullish or bearish, yeah, I'll just say ranging. Because look at it now. This is what happened today on 5 minute time frame. But if you look at the daily time frame, if you look at the daily time frame, you see that everything is bearish. Everything is bearish. This is what happened on daily time frame. Everything is bearish. So look at the daily, start from the daily time frame, then go to lower time frame to pick your entry. But if you're now going to lower time frame, it's not that you now be using 5 minutes. You can use 1 hour. Just all these things, yeah, for you to perfect it, what works for you. Because use a demo account first. Make sure you find what works for you first, and probably personally, I think I use 15 minutes. I use 1 hour and 15 minutes to enter. Yeah, 1 hour and 15 minutes to enter. Then my analysis is on daily 4 hours, daily 4 hours, daily 4 hours. Then I use 1 hour 15 minutes to enter. After placing a trade, do you only monitor your trade based on when it's DP? Because before, yeah, I talked about that. For example, okay, let's say now this is let's say now I open a long position. Let's say I open a long position at this week, at the last week of that day, and top loss is that the second week. Then probably my take profit is that if we fall, wait, fall there. So let's say this is my analysis. I'm just saying. So that means this analysis, my risk to reward is 5.49, which is still okay. So if I'm mixing 5.49 of this trade, let's say I enter the trade now, then I will have marked out my I will have marked out oh, my profit zone, where I want to take my profit zone. So because don't forget to take something out of the market. You are not doing out the market. I'll mark out my profit zone, my profit zone, I'll mark out my profit zone. So finally, so I can just take this trade and go to, probably I'll even go and play game, or I'll take a wake up the day. So I've set my, okay, if this trade has activated now, if it's coming down, once it's a, you should take me out of the trade. That means I've accepted my loss. Once they reach here, you can set it, okay, market will take 25%, close 25% for me. Close 25% for me at this entry. At this entry, close another 25% for me. 25% of what's left, not 25% of my uh, entire capital. Then I can be like, okay, take another 25% here for me from what's left. Take another 25% from it from what left. Take another 25% from then the last one. This is my final take profit. Then take me out of the market totally. So with this, I've taken a lot of profits at so many profit zones. I'm taking something else, I'm taking something, I'm taking something. So with that, you don't need to watch your trade. You watching your trade. Why don't you watch your trade? Okay, let's say imagine now. It's not all trade that will just happen like this and everything. A lot of trades will be ranging and okay, let's say now you bought here. Let's say you bought here, you bought the project here. This is okay. Where's my ruler? This is from A. You bought A to here. This is your take profit. Market market is your take profit. So yeah, market is your take profit. So you now use 10, 12 days, 12 days to watch your charts. You will not eat, you will not do anything. Definitely it's not possible. So you watching your charts is you are creating more fear for yourself. Let's say now you're watching the chart, you're watching the trade. And for example, now let's say I took this trade now. Let's say I took this trade. As I said earlier, so always take something out from the market. This is this is 25%. This is at 25%. This is I'm taking another 25% here. I'm taking another 25% here. I'm taking another 25% here. And my TP is here. So let's now look at the person that is watching that is you're watching market activated here. So as market reach my first 25, I'm taking some profit out. Markets take another 25, I'm taking some profit out. Another 20, the third 25, I'm taking something out. The fourth 25, I'm taking something out. So you watching that trade, you now start you start the fear will be coming. This thing don't go, don't go. It's coming down, it's coming down. Probably you might have closed the last one year, though you have even taken like almost 80% out. But you might close everything probably around here. But look at what happened. You went there, come back, went there, came to your entry level, you are in loss for a little bit and come back and finally took the last one out. So don't watch your trade. You don't need to watch your trade. There are a lot of buttons you can use to set trade. Just filter your trade, set a lot of big profit, and you are good to go. And because I'm phobia of not trade of the in sports. Even if it is sports safe, it's because your psychology is strong enough to handle sports. A lot of people still monitor their trade on sports. Their body's coin is dropping. Then, if you can't build the psychology of trading futures, do what works for you. Everybody cannot do the same thing. You cannot just, if you don't have the psychology to trade futures, just focus on sports and have fun. I think I've answered. Then the last one, why doing intraday frame? You're supposed to choose 5 minutes. If you are an intraday trader, that means you are holding trades for longer day. So that means if you are holding trade for longer day, that means you should be analyzing on daily charts. So if you're analyzing on daily charts, I don't know where 5 minutes and 15 minutes is coming in. Analyze on daily chart if you're an intraday trader. So thank you very much. I guess I've answered all questions. So probably if you have any other question for me, contact me on my social media and message me on the Discord and mail me and message me. Thank you.
Thank you, Edson, for the awesome presentation and for answering all those questions thoroughly. As I mentioned, the workshop will be recorded and will be uploaded onto YouTube on Covalence channel in the next couple of days. And if you have any more questions, reach out to Edson at his different social media handles here. But thank you so much, Edson, for the presentation. And we'll see everyone soon.
Thank you very much, Jennifer.
Great. Awesome. Have a nice day, everyone.